Hi everyone, welcome. So just a few announcements. To qualify for the 150 mini stimulus grant, we ask that you fill out an entry form, and an entry form will be distributed to all participants at the end of the sessions. And at the end of each session, 3 people will be randomly chosen to receive a free copy of Jasper's book. So be sure to stay during the whole session so that you can have that opportunity. And finally, the 4th session, which is tomorrow, will be a Q&A session with Patelco bankers and investment consultant. Tryla, before we move on, would you like to talk a little bit about the grant and the book distribution?
Well, just for the people that haven't been with us the whole time, I'll just give you a little background. The stimulus is for those that are underbanked or unbanked, excuse me. Underbanked, by definition, is anyone who has a checking account or less. That means no savings, no investment, stocks, IRAs, that type of thing, so that the money can be used towards opening an account similar to those for investment purposes to get you kind of jump started. The other exciting thing is the book lotto. So as I mentioned, Jasper's book, the Build Wealth Challenge is going to be up for grabs, and we're going to randomly run our ticker taper this evening towards the end of the session to see who will win. 3 people will be chosen tonight, and then we'll increase it a little bit tomorrow. So yeah, make sure that you're there tomorrow as well. And without further ado, Simone, can you continue?
Mm-hmm. Just a few housekeeping for Zoom. It looks like most of you guys already have it, but if not, could you please change your name to display your first and last name? Additionally, please feel free to use the chat today if a question ever pops up into your head. Jasper will pause throughout the session to answer and make sure no questions are missed into the chat. And finally, just be very mindful of the language that we're sharing. You want to use respectful and appropriate language when talking to each other and when talking in the chat. And then this is the program team from Occur for financial literacy. And without further ado, Jasper Smith.
And actually, before you hand it over, Simone said, let's go ahead and kick off the poll question for tonight. Yep. So just like the last 2 nights, we do a pre-poll and then we'll do a post-poll. So I'm gonna ask Simone to go ahead and launch that initial poll for me.
Can you guys see the poll?
Mm-hmm.
Okay, just make sure.
Mm-hmm.
Oh, that's not true. Mm-hmm.
All right, so just like that, the last couple of nights, just want to take a few minutes here to give everybody some time to answer the poll questions. This will be a kind of a good gauge of like how I can maneuver tonight. I mean, I got a lot to cover, but again, just kind of help set the stage, just like we've done the last couple of nights. So got just about everybody. I'll give about another 30 seconds, Simone, and we can close it out. Actually, yeah, one more.
Once I end the poll, do you want me to leave it up a little bit for you?
Yeah, if you don't mind, yeah.
Mm-hmm.
Yep.
Just checking.
Yeah. Right, so appreciate everybody for kicking off the poll. poll questions here. And that first one, we'll talk about risk. And so this is one of those standard questions that I always ask of a prospective client, is like how do they feel about risk? It's always a question that comes up when you're dealing with investments. So I see the majority of folks just aren't quite sure, and that's kind of normal, and that's okay. It's totally fine. So we'll talk about risk, and yeah, we'll dig pretty deep into that one. And then with investments for number two, yeah, I started asking this question because people would tell me they're not an investor, and then I would ask, hey, do you have a retirement account through your job? And they would say, yeah. And I was like, oh, so you're an investor. But for some reason, they weren't connecting the two. And so I just wanted to kind of see, do people have only accounts through their jobs, or do they have some things on their own? So, and if you don't have one, that's okay. We'll talk about some easy ways you can get started. So thank you for answering that. And then the last one, for those who are into investing to some degree, is there a strategy? Is there a strategy is the question. So, okay, majority don't really have a strategy, but it would be helpful for those who don't have. I mean, that's, not having it is something we can work on, but also if I have some investments in place, I don't want to wing it. Like, I want to be clear about what's going on. So we'll talk about that as we go through the session tonight. So thank you so much for that, Simone. I saw something pop up here in the chat. Let me see here really quick. Okay, good. Andrea, I was just looking at your note here really quick. So it's looks like you're okay. Gotcha. Okay, so moving some things around, but you're working with a financial advisor. That's the key thing that I would say to note, is that some people just shouldn't be doing their own investments. And we'll talk a little bit about that a little later, but yeah, having an expert to help you is beneficial. And I have more than enough stories as to why, but thank you, Andrea, for sharing that. All right, so give me a second here. I'm gonna hop over into my presentation deck. So it should come up here in a second. All right, so you should be able to see my logo now. So this is your first time joining us tonight. Actually, before I start, I just want to thank everybody again for showing up for night number 3. It just shows me you care. Showing up. I love it. I would love to have, again, more people in attendance, but the right people have showed up once again this evening. And so I appreciate everybody who's been rocking out with us for the last couple of nights. If this is your first time joining us, thanks for joining tonight. And so with that, my goal for this session, it has not changed. It is exactly the same. It's to change the way you think and feel about money in order for you to achieve financial peace of mind. Now, I know the title on this session was Banking and Investments, and I guess I just missed it too. We're going to be more so just on the investment stuff tonight. But what I will do is I'll throw in, because we probably should have some time, I would throw in a little bit around retirement, because they're almost kind of like separate topics. But because investments are usually dealing with people's retirement accounts, or that's how a lot of us have been introduced to investing, I do want to take a few minutes to kind of discuss some basic things around retirement planning. So yeah, just want to let you all know that you're in for a little treat tonight. All right. So how does an investment account work? This is a diagram that I drew, but I'll tell you, there's always a story behind the stuff that I show y'all in these decks. So I've been a financial advisor inside of a bank, and people would walk in and they would literally just run past my desk because they were just afraid that if they opened up an account and something happens with the stock market, they're going to lose all their money. So this kept happening. And I even asked some of the bankers I was working with, they felt the same way. I was like, if y'all just understood how these things work, you might be more of a fan. And so again, it kept happening. So one day I sat down, I drew this diagram. And so I'll try to walk you through it, and I'll take my time. But if you got a question, go ahead and just stop me. But I'll try to we're going to follow the arrows, y'all. That's what we're going to do. So let's say you've never had an investment account before, and you were like, Jasper, I want to get started. So let's say you had $1,000. So you're going to start at the top and make the deposit into your account. So we're going to open up your account, we're going to put in $1,000. And that $1,000 sits in that little sliver, that piece of the pie called cash. So cash could be, usually it's going to be like a money market type of fund, where if you somehow got cold feet and just wanted to take your money out of the account, you can immediately do that with that withdrawal. Like right away, you can put the money in, you can take it right out. That's how it works, right? So you can always make that movement. And so what'll happen is, well, the money will sit there until we decide what to invest in. So for all those people who are afraid of opening the account and losing their money, I was like, you don't lose it right away. It's just going to sit there for a little while. So then we have a discussion, we decide what we're going to invest in. And then let's just say we pick a stock. And so now we place a trade. A lot of this stuff can be automated now. So this process is, I'll say it's somewhat dated, but this is still in essence how investment accounts work. So we decide on picking a stock, and let's say we invest $500 out of 1,000. So now at that moment in time, if you were to log in and look at your statement or look at the paper statement, it would show your account balance would still be 1,000, and then you'd had 500 in cash and then $500 worth of that stock. All right, everybody with me so far? If not, let me know. I'll take my time. But so as of right now, we've got $1,000. We've placed 500 into. We're just gonna pick a stock for this example, not all the other stuff. So let's fast forward. Let's say a year goes by, and this stock doubles. So that $500 has now grown to 1,000. Still in the market, still active, still moving up and down. But then you left that $500 in cash. And so you might say, you know what? Made a little money. Let me cash in about half of that. So then you place an additional order to sell. So you'll see the other arrow, sells. So then they take half of the stock, sell it. You collect the proceeds of $500. And now that goes back into the cash portion. So now you're looking at your statement online or on paper, you'd have $1,000 in cash. $500 is again back in stock. All right, so I'll pause there for a second, but I kind of went through the cycle really quick. EFT, we'll talk about it a little bit later. ETF, I'm sorry, ETF. We'll talk about those a little bit later. So everybody good so far? So this is generally how investment accounts have worked forever. Despite technology, like there's some apps now where it kind of skips, I'll say, the cash step where you do open the account, and once the money goes in, it's automatically invested. So there are some accounts where it doesn't kind of sit in that, I call it cash, or that holding tank. It will go right into the market or whatever investment you choose. All right. But this diagram was very helpful for me to really this was like the basics of investments. Because again, so many people were afraid of investing because they thought they were just going to lose money if they opened the account. So I drew this diagram and it worked wonders. Like literally people were like, oh, I get it. So there was that learning curve, but that was my job inside of that bank. And again, I showed this diagram to all my coworkers because they too were a little uncomfortable with dealing with investments. So yeah, Andrea, the sell part. So literally it is, again, so we had the 500 to start that we put into the stock. It took a year, but the stock, well, you have to do it this way. Started at 500, the stock doubled to 1,000. So it's literally, now you can like press a button to sell enough shares to cover that $500 gain. So we just want to take half. So we sell off half of the shares of stock, and then it just goes back into the cash portion of the account. So back in the day, it was like you had to make a phone call and then the transaction was completed. Now, most platforms, you just press a button. So the buying and selling of investments is very easy now just because of technology. Technology has allowed us to make Everybody's life very easy once we've initially set up an account. It's a couple of clicks. You can still call in orders, but most people, it's all done online pretty easily. So yes, you sold this so you could get some money back into cash. Because again, Andrea, with your example, let's say you needed the money. You might have needed $500 for some goal you had set, but you knew you weren't going to need the money for a year, and the stock just so happened to double within that year. So you're like, oh, where can I get $500 from? So yes, you sold off some of your stock back into the market, and you pocketed $500, which again goes back into the cash portion, and then you can take out that $500 and use it however you see fit. Now, for the sake of this conversation, we're not going to talk about taxes tonight, but just be mindful that if you make a lot of money in your investment accounts, you will get a 1099. So a little different for retirement accounts, but for investment accounts that we're talking about, you will have to consider taxes as you think about transactions. So for some people, they really got into like trading stocks, especially during the pandemic. And so what'll happen is all that buying and selling, they're keeping a record of that. So when it comes time for tax season, they'll see, okay, did you make a lot of money this year? Or you may have suffered some losses in the market. But again, at its core, like this is what's happening inside of investment accounts. Right? All right. So yeah, hopefully this diagram was helpful just to kind of explain the cycle of like how these things work. I just realized that I used to skip this step, but now people are like, oh, I get it. Yeah, an investment account has a couple of different components. So yeah, Kay. So yeah, it could be a capital gain. And just really quickly, since you asked the questions, good timing. So if I sell and I made some money and I had a gain, the IRS is looking at the time frame. So I used a year because anything after like a year plus 1 day, it's at a different tax rate, which is called long-term capital gains. Anything less than a year plus 1 day is called short-term. So in this example, Kay, to your point, if I got lucky, invested my money into that stock and it doubled in 6 months and I sold it in that month, that was less than a year. So I'm going to pay a different rate of tax, the short-term capital gains rate, as opposed to that longer term. So long-term and short-term. So I would recommend people, if you're thinking about getting into investments, just again, be mindful that there may be some tax ramifications depending on how soon you sell that investment. But great question, Kay. Great question. Again, I'm not a tax pro, y'all, but I have to deal with a little bit of tax stuff and dealing with investments. So, you know, I don't mind answering the question, but I know sometimes taxes just get a little complicated if you're doing a lot of activity. All right, so now we all know how an investment account works. So let's keep moving. So here is I started sharing this diagram to try to keep this simple. Again, I told y'all these last couple of nights, I try to keep this stuff as simple as possible so people will kind of grasp the concepts. So what goes up must come down. Exhibit A. This is what normally happens. Stock market goes up. And honestly, I should say everything is a cycle. Whether it's real estate, whether it's business, whether it's stock market, everything is a cycle. Nothing goes up forever. Nothing stays down forever. If it stays down forever, sometimes it goes away, goes out of business. But in this example, when things get good is when people want to start talking about it. The media blows up, everybody gets greedy, and then everybody wants to get in. It's not the best time to get in because everybody's talking about it. You missed the upswing, but you're getting in, whatever. It's a little late. You're paying a little bit more than you should for it, probably. And then it starts to kind of hit that plateau and it starts going down the other way. So it starts getting bad. It gets worse. You get scared. The media reminds you how scared you should be. All your friends and family talk about it's bad out there in the world. Like the fear is what happens. It sets in. It gets bad. And you just ride that roller coaster down. And some people will say, man, you know, I can't take it, Jasper. I got to get out. And I'm like, wait, do we have to get out? because I know what's going to happen. You're going to get out at the wrong time, it's going to go back up. And what happens, y'all, is people repeat this process over and over and over and over and over and over and over. So even despite seeing this example and diagram, something in your mind is going to tell you, nah, can't deal with it. Human behavior. Something's going to happen. You're like, nah. Like I'll give y'all an example. So, and we'll talk about cryptocurrency very, very little tonight, but it happened with all the Bitcoin run-ups. So I missed all the run-ups every single year. I watched it happen. It was low, then it got high, then it crashed. And now nobody talks about it. But I couldn't convince people to do anything else other than cryptocurrency at one point in my career. I mean, it was almost like, what you know about crypto? I was like, I know what you know. and yet, but the world was talking about, see, when nobody was talking about it, it was running up, right? And I watched it. I watched the run up. Nobody called me. Nobody asked questions about it. Once it started hitting those, oh, Bitcoin hit a new high. I mean, everybody was throwing, people throwing thousands of dollars into Bitcoin that has been unproven, no track record. I mean, we got real companies that have been around. I can't get you to do nothing else, but you throwing your hard-earned money into Bitcoin. We got a lot of issues, y'all, and that was one of them. We get so greedy and start buying. It's the worst time to buy. Look. I'll ask y'all this question. Anybody in the group, and you can throw a 1 in the chat. Anybody here like shopping on sale? Throw a 1 in the chat if you like shopping on sale. And I'm gonna put up a 1 because I love a good sale. I love it. Sometimes I get carried away, right? Spending habits, right? We talk about all these things like, I love a good sale. I love a good sale. And I got a few other people with me tonight who love a good sale. So I ask you, when looking at this chart, why do we keep buying stuff at the top? You wouldn't, unless you're, all right, there's always an exception, y'all, to everything. But unless you're buying like a luxury item, most people like buying stuff for the low. Even if you're not in business, you want to get good value for your money. But for some reason with investments, when everybody starts talking about now you want to get in, it's too late for you. Well, I take it back. It's never too late. It's just you might get in at the wrong time and you might be upset when it starts going the other way. So all my Bitcoin people, all my, what was the other one that ran up? They got a lot of pop, Dogecoin. Again, I watched the run up. I did a real life experiment. I bought just so I could show y'all what was going to happen. I showed the world. I went live on Instagram. I bought it. Elon Musk went on Saturday Night Live and started talking about it. It tanked. And I did a real live demonstration like how it goes up and down. Some people still didn't believe that this is always going to keep happening. It's just, can you remember what you did last time? It's counterintuitive, y'all. The best time to buy is at the very bottom. At the worst point with the most fear and all the media attention and the newspapers. I mean, you can't walk anywhere without somebody saying, you know, it's bad out there in that market. Ooh, that stock market looking bad, economy looking bad. Yeah, but it always turns around, y'all. Best time to buy is at the bottom. And you ride that wave up. Problem is, people can't hold on long enough. That's why we get out. That's why we have these emotional times where we can't stick it out because we weren't clear on why we got in. I ask those poll questions on purpose because I ask my clients that every time. We don't do an account unless you answer these questions. I need to know how you're thinking because if you call me on some nonsense, we're not going to be able to work together. It's not that hard, y'all. So ideally, this is what you want to do, right? I want to sell at the top, make the most money, and buy at the lowest. So that you may have heard the adage, buy low, sell high. That's exhibit B. The problem with this is, again, human nature and behavior gets in the way. We'll never know the exact top or bottom until we're long past it because investing is always looking back. See, a bank account or your account at the credit union, they give you an interest rate. You kind of know what's going to happen. Investments, no guarantees. I don't care how great the investment did yesterday, 2 years ago, 5 years ago, 10 years ago. Doesn't mean it's going to keep going in that direction. It could. You hope it does. So we're looking for that definitive answer, and you're not going to get it with investments. There's just this gray area that we'll know what the top and bottom is after some time has passed. So ideally, you want to buy low and sell high. Anything. If I'm a business owner, if I'm an entrepreneur, I want to buy my material. If I'm an artist, I want to buy my supplies at the least amount of cost and sell my artistic work at the highest price. Buy low, sell high. Easy to discuss and say in a session like this, hard to do in real life. We understand this dynamic, y'all, with these two diagrams. It's just hard to live. It's hard to stay true to these diagrams, because when life starts hitting you and stuff is coming your way, you're like, oh, what should I do? And this is why I don't want people doing all of their investing on their own, because you have nobody to fall back on. It's just, it's you and your thoughts. All right. Insider, that's funny. Insider trading. Yeah, it's illegal. Don't do it. If you get a tip, don't tell nobody, you're going to jail. But insiders, yeah, they can manipulate this, and insiders do. All the schemes of the world, the fall of large companies or prominent people who got caught. It's illegal. So you can manipulate markets. It's just illegal to do it. So there are people who, there's an illegal strategy, and this really came into play with social media and all these people who are not licensed, who are online just kind of spewing investment information. So they can get stuff what we can call like this faulty, it's like they hype it up, knowing there's nothing really kind of stable. And then it's called, they call it a pump and dump scheme. Y'all can look this up on your own time. There's a lot of stories about pump and dump, but it's another illegal thing people do. They hype it up, knowing it doesn't have a real basis, and they sell it when the price goes up, but they keep hyping it up long after that, and then it crashes. So they get out before it goes down. So there are a lot of illegal ways to manipulate the market. And this is, I think, the issue with why a lot of people are afraid of investing is because of this uncertainty, for one, but then two, you have a lot of organizations and institutions who have unfortunately done some illegal things to make money. And then there's this level of trust that's just hard to kind of get back from the general public. And there's still people this day who just don't deal with certain organizations, or they say, I don't invest. I'd rather keep my money in the mattress. At least I know where my money's at. It won't grow much. There's a little bit of security risk if you got all your cash at your house, but that's what our society has done to some of us. It's made us just not trust these organizations. So it's hard for, like, I'm a licensed securities professional. I'm gonna do this right now while it's on my mind. So, and this is it's not the link, but if you copy paste this web address, if anybody ever comes to you and says they do investments, securities, they're a wealth manager, any kind of cool looking title, I'm gonna send y'all, let me see, I'll give y'all some little assignment. So I sell securities as, like, I'm a professional. Like, I have licenses to sell products. So if I talk to you about investments, it's because I'm legit. Somebody approaches you, just want a little, take this one with you, write this one in your notes, never forget it. If you are approached and they say they do investments, depending on what type of investments they are, FINRA.org is the Federal Registry. And there's a little option you'll see at the top of the page, says broker check. If I have a little time here at the end, I'll just pull it up and I'll show y'all my record. So you know I'm not lying. I'm on there. So I can't sit out here and do things that would jeopardize my licenses. So it's a good question to ask, because you kind of want to know who you're dealing with. Like, what firm do you represent? Like, I have a relationship with a very large institution. I have to tell people that. I'm licensed. So with investments, be mindful of who you're working with. Just ask some questions. It's okay to ask questions. This is your money. It's okay to ask questions. You don't feel comfortable, don't give them your money. You don't feel comfortable with your money, don't give it to them. You have a choice. And I want you to remember that you always have a choice in this matter. You always have a choice. Right. All right, I told you I would talk about risk a little bit. we'll talk about risk. So there's this continuum from very low to very high. They use some different language in the industry, but for this example, I'll just, there's a lot of risk and there's a little bit of risk. So I'll do the opposite ends of the scale. A very low risk is your bank account or your credit union account. Not gonna make any money, but it's gonna be there when you wake up. You're not gonna get rich saving all that money. You won't get wealthy saving all that money. But if you got bills to pay, it's good to have your money in your checking account because money can come and go. It's low risk. It's gonna be there when you need it to pay those bills. Let's skip to the other side, the far end, the very high, the risky folks. I'll say we a little crazy, but hear me out. So let's say we are investing in a business. Let's say I launch a business and I want all of y'all to be my investors. But let me tell you about the business. I'm doing it in a country that we'll call it underdeveloped. They don't have infrastructure, a whole lot of issues, but I see the vision, y'all. I see the vision. And y'all like, Jasper, we trust in this vision. Now, I'm gonna ask for some money because I need to invest in my business to make it work. Now, doesn't work, we all losing our money. And y'all are gonna hate me. But if I make this thing work in that country, we gonna make a lot of money. There's a lot of risk, y'all. So a lot of people wouldn't give me that investment money. They would say, Jasper, we like you, we trust you, we know you got the track record, but man, this is just a little too much for me. And you've got to be willing to say that. Like if you're not comfortable, you shouldn't do it. Now give me 1 second. I'm in another room today, but the sun, give me 1 second, I'll be right back. All right, let's try this. All right. So the high risk, again, you always have a choice in this matter. So for a lot of people, if they've gotten to an investment and let's say it didn't work out well the first time, then they may have this kind of bad taste in their mouth about investing in general because maybe it was too risky for them. And so you might have different accounts. So it's okay to have a different risk profile for different accounts. Let me explain again. So if I'm thinking about retirement and it's 10, 20, 30, 40 years away, it almost is in my best interest to be a little more aggressive because I have a lot more time. So I can ride the ups and downs, but I know if I do it long enough, I'll probably have a lot more money to show for my time. If, again, I use the example of having to pay my bills. Actually, I'll use another one. So a lot of people who are interested in real estate will say, well, I want to invest the money because I want it to grow so I can put a bigger down payment. Woo, we playing with fire, y'all. You don't know what's going to happen with that investment. You don't know what's going to happen with the market. You can get lucky. And I think the problem is that people have gotten lucky utilizing such a strategy, but it was not in their best interest to invest money that they know they were going to need. And I'll say that again. Please don't invest money you know that you need. Like, please, just don't. If you know you need this money in a relatively short amount of time, please don't put that money at risk. Put that in a savings account, put it into a CD, just something that you know, I'm gonna need this money at a certain time frame. You should not put it at risk because you just can't, you won't know how that investment will perform. But if you look at your different accounts, it's okay to be a little more aggressive in one account, like that retirement account is a little further away. It's okay to be safe or a little more conservative in the checking account and savings account because you need the money in a relatively shorter amount of time. And then you may have kind of that in-between account where you're like, well, Jasper, I don't need this money for at least longer than a year, but not like 5 years. Okay, that's kind of intermediate. I don't want to play it too safe. I don't want to play it too risky. So you always have the ability to take risk. I'll say you have the ability to have different risk profiles in different accounts. So every account shouldn't look identical. If so, I'm just going to have questions as to why it does. And if you can explain it to me as your financial planner, I'm gonna say, sounds good to me. Let's keep it moving. All right, so risk. Think about risk. Risk is always a conversation with every client, investment client. We gotta talk about risk. And it's interesting because the older you get in life, your risk profile changes. Just getting older, just because you've seen enough in the world, you're like, I've seen this before, or just you've seen enough. So now you have a radar, right? So you understand risk a little bit more because you've lived. But also just education levels. As you learn more and experience more, that will also play on how much risk you take. Your family, friends, or close circle. Say birds of a feather flock together. And what you'll find is that groups of people tend to do similar types of investing. Whatever that investment might be. It doesn't always have to be the stock market, but again, some people are only interested in certain types of investment. So the people you hang around and surround yourself with will also influence your risk level. So ask random question, but has anybody on here ever gone skydiving? And if so, just throw a 2 in the chat if you've ever gone skydiving. All right. Hey, there we go. We got a couple. All right now. Look at that. And they are alive to tell the story. It's always so so thank you all. So I've gone skydiving too. I'm still alive. Yeah, people are like, well, what if the parachute don't open up? Maybe it's just my time to go. Maybe it was just my time. But we've got some other risk takers who have jumped out of an airplane and have lived to tell the story. And I'm one of those many people. And yes, all we can remember, and this is very indicative of risk, very indicative of risk. Oh God, just lost my thought. I had it and I was looking at the chat. Oh God, just lost my thought. I was looking at the chat and it just hit me. Oh, here's the thing. With risk and investing, we tend to harbor feelings and only remember the losses more than the gains. So using this skydiving example, we will only remember the videos of people's parachutes not opening up. And that's what we'll always remember. It takes one video and you're like, nope, I'm good. Don't need to do it. That with my luck, my parents, that one video, despite all the millions of people who've gone and survived, and we got a couple on here tonight, I'm one of them, that still won't change your mind. And that's okay, y'all. And that is totally fine. But risk with investments, I do want to encourage you to try to take a little more risk because this is the reality of not taking risk. You won't make enough money. You can't work that many hours in the day. So we've got to take some risk. Finally got to take some risk, or we run the risk of not making the money we deserve. So I have this talk a lot with, and we'll talk about retirement a little bit. It's what scares me about, when I talk to younger professionals, even mid-career professionals, they don't take enough risk. And I'm like, just ask somebody who's like over 65. Like talk to your elders. Like, I think everybody's had, like, if you're of a certain age, you've had so much life experience. You literally can tell us what not to do and have this, we can almost have this perfect life if we just listened. I'm not saying I take every crumb of knowledge and wisdom that your elders have imparted on you, but many of my elders have told me the same 3 things. Wish I would have saved more when I was younger. Wish I would have invested more. And they don't say invest in more, they just say more. Because again, they've lived. And then the third one is they wish they would have got their insurances when they were younger and healthier. And it's always those 3. Well, I'm old now and I needed it and I couldn't get it, or my leg. My elders, I listened, y'all. I was like, what didn't you do? And this is one of the things that I did when I first got into the industry. I was 20, I was fresh out of college. And I would just ask people like, yo, what do you wish you would have done? And they were like, Jasper, just if you can start saving and investing and just stick with it, you'll be wealthy. And I was like, sounds good. Like I didn't even try to pick it up. I was so young and naive. I just didn't know. But I kept asking people who were experts, not my cousin who's not a financial expert, not Grammy, not my elders at the church. I was asking actual people who were good with money, who were in the profession, what they wish they would, and it checked out. It was the same couple of things they kept saying. I said, if y'all are experts and you're telling 21-year-old Jasper to do it, it's got to be right. And it was. So I never had this fear because I wasn't afraid to ask. I wasn't afraid to ask. And a lot of people have been afraid to ask these questions, or they're going to the internet and just getting information thrown at them. So you got to listen sometimes, but understand that risk is a good thing. Yes, ma'am. Hop in. Go ahead. Oh, still on mute.
Yeah, sorry. I need to jump in here on this piece about the information. Is that my experience has been that in going to predominantly white institutions, for universities and stuff, my so-called white friends who had stocks and bonds and stuff in their families and their parents were giving them information, they did not share that information with anybody Black or Asian.
Yeah.
In our little study groups and all that kind of stuff. And this is one of the things that has happened to people who are really much older, who didn't get in. That statement that you just made about, I'm old now, I need the insurance. Nobody told them about insurance.
Yep.
And if they didn't have a Black family member or somebody who came through from the city who had some knowledge or who had been, exposed to business, they didn't get any information. So that's a good point in terms of getting information and using it. But for us, there is a racial divide. And that racial divide has definitely caused us to lose a good deal of asset valuation in how we place our money. And also in terms of how the system works in each state, because each state has its own little rocky road of things, and we don't even get that information. And the only reason I can say this is that my mom was a real estate broker for decades. And she worked on one of the state real estate boards up here in Sacramento at one point as an advisor. And she came back with some of the wildest information that she had ever seen or heard. And she belonged to the National Realtists Board, which is the Black real estate brokers nationwide. They hadn't even heard about this stuff.
Yes.
Okay. So when you get information from folks, you really have to study hard, and you have to see if you can find more information. And it's on us to do more reading. Like I tell my students, you got to read the Wall Street Journal, because that's the gossip column, and that will tell you where stuff is going and where it's not going.
Yeah, so let me say this here, and thank you for sharing that, because this is why I wish more people showed up to these sessions, y'all. Like, we're doing, so to her point, this is our third time doing this, and this is why we always encourage everybody to share this information and actually I'm not gonna say pull. I mean, we can't pull people in because this is virtual, but like, this is why we want more people to show up, because I keep hearing that. I've been in the industry for 16 years, and I'm never not going to hear what she just shared. Well, we didn't know the information. Well, when we tried to give it to you, it didn't show up. Like, and that's always my response. And it's not I'm generalizing, y'all. But again, we had a record number of registrations for this entire series. And here we are, we still haven't eclipsed 30 people. But I'm appreciative of those who do come, because at least you here. Like, I appreciate people who show up, because the only issues I have is just, we're going to keep doing this work. We just got to get more people to tune in. So, I'll hop back in with the investment piece. I've kind of mentioned time a couple of instances in previous slides, but with investments, y'all, we got to think about our time horizon. Again, am I doing this for the short term, the long term, intermediate term? People who do real estate, I'm going to flip it. Okay, great. Good luck. Sometimes it works, sometimes it doesn't. But there's risk in everything, right? And so we talked about risk, but we also got to think about this timing. Sometimes it's not a good time to invest because you have other priorities. So maybe we need to focus on saving or paying down debt, and maybe we don't invest as much as we want. I'm not a fan of like either or with financial planning. I always want to try to figure out and. So if this isn't the ideal time for me to invest, can I set a time of saying, let's say 3 months from now, I start investing? Or if I haven't been contributing as much to my overall investment strategy, maybe I set a time of, hey, every 3 months I add $5 more. And see, I use these small numbers and increments because it doesn't scare you, right? Everybody can do $5 more if we just so choose, right? So we got to remember the time frame, because also what has happened is I've had the client come into my office and say, hey, I got into this investment, I was looking at the returns. I was just expecting it to do X number of percent in return. It's not happening quick enough. And I said, not much you can do about it. Like, you don't run, like, it was a stock they were talking about. I was like, you don't run that company. You're not telling me what the company's about to do that's going to help improve their stock price, which is going to help you as an owner of the stock. So maybe you hold on to the stock a little longer. If you want to wait, if you want to sell it out, you sell. See, the timing thing is interesting because people feel like, well, if I sell out, I can never get back in. Not always the case. It depends on what type of investment that you're in. So if I have a stock I like today and I sell it, as long as that company is still in business, I can always get back in. Now, I probably can't get back in at the same price. So maybe the stock price has gone up. Doesn't help me if I want to get back in later, or maybe it's gone down. So maybe I get in at a discount, but I've got to always think about time when I think about my investment strategy. Time is always and will be forever important. And we talked about taxes a little bit earlier, but how long you hold on to an investment also matters. So next is how much and how frequent. How much you trying to do? How often do you want to do it? If I'm just starting out on my investment journey, I need to do what I can afford to do. How much is indicative on where you are right now? That's the how much question, right? We talked about budgeting and money management on Monday. We need to know how much, right? And that's why I don't like skipping that session before I do an investment session, because a lot of people want to skip and talk about investments because it's a sexier topic. But let's tackle the basics first. So once we know what kind of money we're playing with and dealing with, then we can, figure things out. Yeah, Charlotte, go ahead. Want to hop in? I saw your hand, Charlotte. Yep.
So like, what if you're like tight on money, or what you deem as extra money that can be used for investing, right? So let's say you just have a few dollars and you want Google stock, and you have maybe just a couple of $100, and I think it's at now almost $2,000 a share. So you've only got a couple of $100. So there's some of those vendors, I think Cash App has one of those features as well, where you can buy these little mini shares of stock in your favorite stocks that you would normally not be able to afford. Does that make sense to do? I mean, is there any real gain in that?
Absolutely, yeah, and that's why they created those opportunities for people, because, and I think this kind of alludes to the question in the chat. The minimums were a problem for a lot of people. So the Google is a great example. I can't afford the one share of Google stock, but I can own a fraction of a share. So I still own. I just don't own a full. I'm still an owner, but I own less than a share. There's nothing wrong with it. It's just some people would rather own the whole share. And so sometimes they'll say, well, if I can't afford the whole share, I'm not getting in. To each his own, right? If I just still want to own some of it, it's okay to own fractional shares, because if you buy enough of the fractional shares over time, you'll own a full share and then some. And to your point about I guess kind of talking about the how much, again, I don't want you investing money you don't have. And I need people to be very clear on that. Like, I know investments is fun, it's exciting when you read the news and hear stories, but sometimes it's just not the right time for you. Honestly, y'all, sometimes it's just not a good time to do it. Sometimes you gotta say, look, when I can do this, I will consider it. You know, and speaking about pricing and how much, you know, stock prices vary. You know, then we have funds that manage larger pots, and we'll talk about that in a little bit here, but there are going to be different minimums on certain accounts that you are looking to get into. It's just like real estate, right? They list the price. Here's how much it's going to cost to get this property. So with the stock, they're going to list, here's the stock price today. You check tomorrow, maybe it's higher, maybe it's lower. So in looking at your budget and assessing what it is you really want to buy on the market, well, I got to make sure I got enough money to cover the deal. And if I don't, maybe I need to wait. However, in my example that I showed earlier on how to open up an investment account, you can still start putting money into the investment account. You just can't click the button to buy the stock. So if you think about this, y'all, you're still setting up this kind of training ground to be ready. And I have a lot of clients who are like, Jasper, I can't afford to get in. Great, let's start now and build up. So when I talk about how frequent, I'll never forget, there's a company, there's a fund I was looking at, and the lady was like, you know, I don't have, I think it was like $1,000, because she was like, I got to get into that fund. I was like, but you don't have $1,000. But she was like, well, you know, I'm working on some overtime. I could do 200 for sure. Or maybe I'll do a little more. I said, okay, look, if you do $200 a month, in 5 months, you will have $1,000 and we'll place the trade. But here's what happened, y'all. Oh, she found some extra money, just so y'all know. Remember that for those of you who were here on Monday, we did the once challenge. Oh, we found some extra money. So she was doing 200 for 5 months. Well, that was the initial plan. But once we took a second look at her budget. Yeah, we got into that fund a lot sooner. So minimums will vary depending on what type of investment you're getting or looking into. And, you know, just be mindful of your comfort level. Just be mindful of your comfort level. All right. And I saw we had a quick question in the chat. Hold on, while let me get through a couple more of these, and then I'll hit your questions here in the chat. But thanks for posting.
No,
that.
you answered the question for me.
Okay.
I just wanted, but I'll wait. I'll wait.
Okay. So knowing the basics. So stock is just ownership. If somebody says, if you don't say ownership when you say stock, okay, you shouldn't be doing it. But stock is just you owning a portion of the company, even if it's a small portion, one share, a fractional share. If you have something on paper that says you own some of that stock, you are an owner. You can go to the annual meeting. They do them virtually now primarily, but you can show up and say, I own some of the company. They're not going to say you own a few crumbs. They don't care. You are an owner. I'm telling you, like when I do youth sessions and I talk to parents and grandparents about why they should invest in stocks and companies for the youth, like just imagine if all these little kids kept saying, I own that company. And then they actually showed you their statement and they showed you they own the stock. Like how cool would that be? Like that's the kind of conversation I want us to start having, is that what do we own? Our clothes aren't worth that much. I'm just saying, some of y'all dress so fly, your clothes ain't worth that much. But these stocks, these companies, these businesses are doing things, they're making money every single day. Every single day. All right, give me 1 second. I'm still trying to maneuver this sunlight here in this room. Give me one moment. Let me try to make an adjustment one more time. Right. Hopefully this should be the last time. The sun just doesn't treat me right in these sessions. But so stocks, so bonds. I did see a question quick pop up in bonds. Let me see. Let me check. I saw something about a question. Bonds. I don't really get too deep into bonds. I mean, there are. I think the question was around like municipal bonds, which are more of a tool for like wealthier people because of the taxation on the gains of municipal bonds specifically. But bonds haven't been I'll say the greatest performing asset class. They're a good balance in any portfolio, but bonds, just so you all know, at its core is a debt instrument. So the example is, we can use the municipal, so a county, a city could say, hey, we need to take out a bond to build a bridge. So they issue these bonds, it's debt, so people can pay into it. But what they do is a bond promises a payment. So the bond may say, well, Jasper, I need $1,000 from you, but with that 1,000, I'm going to use that because I need that for my project. I'm going to pay you with, an interest. They call it a coupon, but I'm going to pay you I'm going to make a payment to you because it's going to take me 10 years to build this bridge, road, whatever. And so what they do, they take my 1,000 up front, but then they pay me a little bit every year. Like, it's a 10-year project, so I get a little bit of money every single year that they're working on building whatever they're building. And then at the very end, the very last payment, they give me my $1,000 back. That's how a bond works. That's a short version. Every bond in the world, I'll share a resource with everybody here towards the end. If I don't remember, just remind me. I'll share a resource with you because, again, bonds, again, they haven't performed as well when you look at stocks, but they're good. They kind of help balance out any good portfolio because when times are a little rough, bonds are providing income to people. So those coupon payments are income. So some people who need income from their investments look at bonds. There are also stocks that pay dividends. I'm not going so deep into there, but dividends where, again, a company does well and they say, we're going to credit all of our shareholders because we had a great year. They can give out a dividend payment, and that's also can be income for people. So having a mix of stocks and bonds could also be an income source for people. And some people do have investment accounts that produce income. Maybe it's not as much to replace your job, but if you own enough shares or enough assets, then they can be substantial, the larger or more shares that you own. Mutual funds, I like to say mutual funds are great options for the newer investor. And we talked about risk a little bit earlier, but mutual funds, what happens is you have a fund manager, and there's a fee to get into these, but the manager is picking the stocks and bonds. So when you trying to figure out one company that could make or break your overall portfolio, a mutual fund is going to have a basket full. So let's just pick, if you're into technology, just list every technology company you love, and we'll own a little bit of that stock, some portion, and we'll bundle it up in a fund. So you can just pay for our fund, but you'll have a whole lot of tech investments. So mutual funds help to kind of spread out a lot of the risk. Because again, if I'm starting out newer as an investor, trying to handpick the individual stock or individual bond usually won't net the best results. So if I'm a newer investor, I want to look at maybe getting into a fund initially. Plus, you get more bang for your buck. So we talked about minimums recently. Maybe you can't afford that one share of Google stock, but in that mutual fund, maybe the fund owns some Google stock. So still got some Google, but it didn't cost you $2,000 or whatever the share price was after the day. So there are easier ways to get in. So over time, exchange traded funds came into play. They are in close relation to the mutual fund. They have a slightly different cost structure. And so what happens is they became very popular because they too, again, are tracking certain industry sectors or looking at different stocks and bonds, but they're basing that off a basket full. So again, helping you as the individual to not have to worry so much about, did I pick the right one or not? So ETFs, again, another great resource to consider if I'm newer to investing, a great place to start. So knowing some of the basics is helpful because we may hear a lot of terms being thrown out about investments, but I think at its core, you need to have just a basic definition. If you can tell me what it is, then maybe you should have some money in there. But if you can't tell me what it is, let's go do some more research and let's learn a little bit more. So the shiny new toys, I talked about cryptocurrency a little bit. Good luck. I don't give my clients any advice on it. Nobody really talks about it right now. I mean, unless you're like super wealthy and have money to lose, then you're kind of still in it. Yes, a lot of large financial organizations are doing crypto type of things. Again, y'all, we just don't know. But good luck if you so choose to go down the crypto route. The NFTs, this was my God. During the pandemic, I couldn't, people wouldn't stop asking me about non-fungible tokens or NFTs. Again, I don't give any investment advice on this either, because I still don't fully understand how these things work and the real value that somebody just stamping on an image. Again, you can look these up on the internet, y'all. But again, if I'm just starting out, we can't get distracted with these things. If you got a few dollars and you've gotten the rest of your plan, I mean, your entire financial plan locked down and loaded, and you still got a little bit of money to play with, then go play. But until you get to that point, please don't spend a lot of your time and effort trying to figure out these markets. I recommend that. I don't know your whole situation, but I would recommend you not get distracted by the shiny new toy. Oops. And I'll share the links because that was my reminder. So I'll have some links here that I'll do during the Q&A that I'll post up. So there was my reminder. All right. So if you needed somebody to like remind you why it's okay and you should be in the stock market, here are the returns of the S&P 500 index since 1927. Whether you know about investments or not, if you just look at this diagram, you will see there's way more green, which are positive years, than red. So if anybody who says, I'm not going to invest my money, I always ask, why not? The stock market has been very friendly to people. Yes, you can look at 08, 09, right? That big red of, it was rough. But look what happens after these downturns in the market. It goes up, y'all. So we needed a real life, you know, let me bring it back to current times. 2022 was not a great year for the stock market. This year hasn't been that great, but I know it's gonna be better than last year. Won't be as bad. If I'm wrong, y'all can let me know it on December, January 1 of next year. But these types of charts, I don't make this information up. So it's got a track record. So the reason I don't want you to be distracted by the crypto, the internet, all this new stuff that we get distracted with, just let it go, y'all. This is tried and true. Look, getting wealthy sometimes is boring. Let me just share that with y'all. It's not exciting. It's not a movie. There's no climactic plot. It's basic. Just put the money in and let it sit for a while. Check up on it here and there, add some more to it. But if this doesn't sell you on getting invested or staying invested, I don't know what will. So for anybody who's like, man, I don't believe in it. I'm not trying to make you a believer. I'm just going to show you the facts. It is then up to you to make that decision as to whether or not you're going to jump into this world and try it a little bit. Just try a little bit. And again, I know I'm focusing heavily on investors in the markets because it is I'll say it's one of the easiest ways to become an investor is to get into the stock market. And I know we may have some folks who love real estate. We talked about real estate the last couple of nights briefly. A lot more barriers to get into real estate. They're going to check your credit. Nobody's checking your credit to open an investment account. We know there's racism that has occurred. They don't care if you're black or white. If you open your account, you pull out your phone right now and pull up an app and start filling out your information. It doesn't ask if you're black or white, green, yellow, purple. So you rule that out. So the barriers to entry are a little bit higher for real estate, but I also understand this too. And I always kind of say this in every investment session. Some people just love real estate only because that's the only thing they've heard about in terms of what can create wealth. But I know businesses can create wealth. Stock market investments can create wealth. But here's the other thing. This is a real thing. People love real estate because they can touch it. It's tangible. Mm-hmm. See, stock market stuff is on a piece of paper or a screen. You're like, it looks good, but I can't put my finger on it. Mm-hmm. But that building, I can see them building it. I can see them renovating it. So you can kind of, again, we got a chance when we think, y'all. Yes, it's still a viable asset class of having real estate. But did you all know that you can own real estate without physically owning real estate? And if so, just throw a 3 in the chat if you knew that you can buy real estate or have real estate in your investment portfolio, but not physically own real estate. Just throw a 3 in the chat if you knew that. And it's okay if you didn't, but I'm here to educate. But just if anybody has anybody knows or knew that you do not need to physically own real estate to own or have real estate in your portfolio? All right, we got a few. Okay. Somebody isn't safe. Every investment has risk. But it's real estate. It's just, it looks a little different. So you all are going to have a homework assignment, but I began to blow people's minds when I started asking that question. And I didn't create this investment. It's been around for a very long time. So you all are going to have some other homework in addition to going to finra.org. I want you all also to look up, I'm gonna type it right here in the chat. And again, we know the struggles of certain communities with getting loans from lenders. You're not going through that. You don't have to save up for a down payment. You can just get in because it's an investment on the exchange. So here's what it's called. It's called a real estate investment trust. That's all I'm gonna say about it. I want you all to spend some time. It is a way that you can get into real estate investing, but not have to go through all the, I'll say, headaches of physical property ownership. It's not for everybody, but it has elements of real estate. So people say they want real estate for passive income and maybe some tax benefits. Those are the biggest two that I hear about investments in real estate: tax benefits and income, passive, right? I don't want to work. Somebody's going to pay me money. Well, real estate investment trusts are designed, because they're real estate investments, they have to pay out a dividend, which is income. So if I own enough shares in a real estate investment trust type of investment, that pays a dividend. Sometimes it's monthly, sometimes it's quarterly, sometimes it's annually. But if I have enough shares, when they issue the dividend, that is income to me that I did not work for, which means it's passive. So I don't say ever that owning real estate is a bad thing. I just want y'all to think more, because now somebody's like, oh man, this brother hit me with some heavy stuff, because nobody tells you this stuff.
That's right.
Well, get out here and save some money and go buy a house, buy a duplex. Yeah, it's a great strategy. You know how long it takes people to save for a down payment? And yes, I know there are programs that do down payment assistance, but it takes us a long, unless you just came from some money, it takes a long time. So yes, Andre, this is an investment. So this will be in an investment account, and it can definitely pass to your children. You can put beneficiaries on investment accounts. You can, like, it doesn't have to be a retirement account. It doesn't have to be life insurance. It can be just a general investment account. And yes, if you have beneficiaries listed, if you have a trust and your children are listed in your trust, you can pass this stuff down. But again, y'all, only a handful of y'all have ever known this probably. My goal here is to educate. What you decide to do and invest in is up to you and your advisors. But I mean, these are the things we got to think about with investments. I saw somebody mention land ownership. Land's a complicated transaction, right? We got to have some real estate people involved. Land's another whole can of worms. But they're not making no more dirt. They keep tearing stuff down and building it up. So yes, get some dirt. All these things that we're talking about will help. Maybe it produces an income for you today if that's what you needed from your investments. Maybe it's, I need to get into some investments so that it will appreciate over time. So everybody's going to have kind of a different goal, but just be clear. So I asked the question about your investment strategy because, one, it shouldn't be too complicated because you don't want to do too much, right? We can't manage but so much on our own. But maybe if we think a little bit longer through what overall we're trying to accomplish. So if legacy is my thing, well, I'm thinking about things that will appreciate 50 years from now. So that's land, that's big companies, maybe it's a business you're growing, but it's up to you to make that decision. I can't tell you what to do. I can educate you a little bit, point you in a few directions, but ultimately the decision is yours. So yeah, the homework assignment, I keep adding to it. So I'm gonna try to keep this going. So I got finra.org. That's one. I'm gonna abbreviate. Everybody should go look up the REIT. That's the Real Estate Investment Trust. So that's the homework so far. I'm gonna have some more. I am not opening up that can of worms. Not tonight. We're not gonna do it. Can't go ahead to REIT versus account. Investment account. So a REIT is a type of investment. So it's literally, you could type in REIT. This what's a ticker? I can't think of a ticker symbol, but they are actively traded on the stock market every day. If you type in publicly traded REITs and you see a ticker sign, just know it trades every day on the stock market like a stock. That was the thing I forgot. The ETF, the exchange traded funds, that's the other big difference from a mutual fund, is that the ETF trades daily like a stock. Like during the day, you can buy and sell. A mutual fund, the price is decided at the end of the trading day. So that was the big difference I forgot to mention between mutual funds and ETFs or exchange traded funds. And I'll kind of do a quick recap of the different terms that I want everybody to kind of take a look at, just so you have just a good overall basic understanding of what they are. And when you have some more time, feel free to go as deep as you want. But again, I want to expose you all to all these different concepts because it just helps us to grow as a community. Because again, I wish, 40 more people are on this session, or 50, so they all could be hearing this message around be invested, get in, get out, understand your risk, understand like what you're into, what you're not into. Yeah, the REIT, Andrea just said, you don't have to deal with property management stuff. Anybody own property and have a bad tenant that you want to kick out but can't for whatever reason? You don't have to deal with property management issues when you own a real estate investment trust. Yes, that's the other big factor. Some people like property management, so I'm not judging. You all have choices is what I want to stress. Like, we have choices. So here's my investment tip for the night. So this dog is letting everybody know that invest in tennis balls. They have a high rate of return. That's my little levity for investments, because we can go so far in the weeds, we'll all get lost and it'll be dark. But look, y'all, I want people to be clear on their strategy. I want people to think them through. I want people to work with advisors and professionals, not just I'm going to the internet and I'm gonna figure it out by myself, because I look at technology and how it has enabled us to do some of these things on our own, like opening accounts and doing investments with relative ease. But then we're missing that piece of, I'm not validating maybe some of the stuff I'm reading about said investment. Not saying it's a bad one, it's just I'm not discussing it with somebody who may know a little bit more about this particular investment. So I'm always going to encourage you all to not go at it alone, not completely. Like if you're doing okay and it's work, keep doing it. But I'm seeing, or at least I'm hearing, a lot of people just aren't where they want to be.
That's right.
And just know you don't have to do it by yourself. Look, I think I'm smart, but it's just something I'm not gonna waste my time trying to figure it out. I'm gonna call somebody. So I'm glad y'all are here tonight. Like, at least you're like, yes, it's a real person who's just keeping it real. Because I mean, yes, a lot of people want to sell you. A lot of people want to get the business, but a lot of people I actually want to help. I want to help people figure out some of these simple things that can just get you past it. Because we got so many other things we got to worry about. So I always kind of end the investment discussion on this point. I'm looking at the clock, y'all. I'm gonna run through the retirement stuff fairly quickly. I'm gonna do a hard 10 minutes, see where we are. So if we can hold the questions, I'm gonna go a hard 10 minutes and just give y'all some retirement stuff. It's just gonna be good stuff. Just buckle up. So, all right, this is a quick one. These are most people's retirement concerns. Running out of money, number one. People are not worried about dying. They're worried about, if I live too long and I don't have enough money, that scares me.
Yep.
Healthcare is the big unknown for most people. That cost, that was a study. It's probably a little dated. It's probably a lot higher now. That's just average cost of a couple who's 65 years old. They just might incur roughly $265,000 worth of healthcare costs. Health is just the unknown factor for everybody with retirement. The other big one is Social Security. When should I take it? I got a lot of thoughts and beliefs about our system. It's going to be there, in my opinion. In my opinion. We're not getting to the political talk tonight. They're going to figure it out. They always seem to figure it out. But you got to decide when you're going to take it. That is the big hurdle for most people is, do I wait or do I take it now? But those are the big three, y'all. The big three concerns for most people with retirement is those three things. All right, how much you need? Hit y'all with two numbers. First one's 80%. So you just remember 80% rule. So I'll give you an example. And I'm assuming this is after tax. If I did this right, yeah, this is after tax. So 60,000 a year means 80%, 48,000. That's 4,000 a month. And I assumed after tax. So this is actually what you're gonna keep. That's the 80% rule, y'all. It's a rule of thumb. This may be too little for some. Maybe it's not enough for others. You might say, Jasper, I need 100% of what I'm making now and then some. That's okay. Okay, let's work on the retirement plan specifically, right? So we have investments, and then we have like retirement specific investments. And there may be a little overlap, but we need to be clear because there's going to be a day we all want to retire in some capacity. Let's just make sure we plan accordingly. So the 80% rule, just remember that number, 80%. Whatever I'm earning right now, would I be comfortable? Could I live the lifestyle I want to live with 80%? Some will say yes, some will say no. Yes, it will depend on where you live. But staying in California is going to be pretty challenging. Like I'm going back home to North Carolina. So, you know, I'm gonna make the money in California. We're going back to the South because I'm a Southern boy. But if you're from California and you want to stay here, just be mindful. Just be mindful that the cost of living is a lot higher in the state of California. I know that's not a shocker to anybody, but just these are just our realities. All right, so the other number. This is another rule. Most people never heard of it. I'll give a quick disclaimer. Don't pick it apart. Again, I told y'all you can't ask any questions now anyway, so we got to hold off. But check this out. So this assumed, I learned this when I feel like 21, 22, first job. Guy was like, how much money will you need to eat in retirement? I was like, I don't know, but I know I got to eat because I'm hungry right now. So it assumes, it's another rule. It makes some assumptions. It assumes that there are two people, and these two people are 65 years old. They're retiring. This pair of two people eat 3 meals a day. Some of y'all gonna say I eat 1, 2, whatever. Just roll with me. Two people eat 3 meals a day. Each of those meals costs $5. So you're not eating nowhere fancy. We're talking value meals, corner store, no holiday celebrations. We ain't doing none of that. Just me and my boo eat 3 meals a day. It's costing $5 a meal. We're gonna do this for 20 years. So in this example, I know that me and my partner, we're going off to glory in 20 years. So at 85, we're out. And then there are 365 days in a year. So if we do a little multiplication, 2 times 3 times 5 times 20 times 365, $219,000. So when people ask me, well, Jasper, you know, I need like a couple $1 million to retire. They start doing all these retirement calculators. You can have fun, y'all, with all the tools and resources. See, I'm old school. I'm real simple and basic. I need to eat. So if I needed a number to shoot for my retirement goal, I am going to shoot for $219,000 as a start. I have not talked about any other expenses that you will incur in retirement, but I know y'all got to eat. And I do realize that, you know, some people, it's just you. So maybe it's not two people, but for the sake of the needing of a number, I use this as kind of like, hey, y'all, can we get to 219? I don't care if it's in one account, 2 accounts. If you're doing real estate, you're going to sell a property or 2. And I just want to make sure you can eat because I know you're hungry. Maybe some of y'all probably eating right now in the session because it's dinner time. So the rule of 219, and remember 219,000, or remember the 80% rule. So are you on track? I don't have a ton of time. I kind of want to get to the Q&A, but I'm gonna kind of breeze through this one. You know, do you have a pension plan? If so, congratulations. A lot of people don't have them, or a lot of companies have done away with them because they're just too expensive. But if you haven't, pension's great. A pension is You could think that it's kind of like your Social Security is going to give you a payout for the rest of your life, but it's coming from your employer. If you have it, great. If you're self-employed, you got a lot of options. It really would be indicative on like you as the owner, and if you have employees and what you really want to provide by way of a retirement benefit, but you have a lot of options. It's just worth having a more in-depth conversation about what you're trying to accomplish with your retirement as the business owner. And then if you have employees or staff, what do you want to offer for them? My typical stuff, I call it the 400 series, the 401ks, 403bs, 457bs. You know, we touch on tax a little bit, pre-tax Roth. Again, these are conversations that I go a little bit deeper in my client meetings or prospective client meetings. But what I do mention is if your employer offers you a match, please don't miss out on the free money. It's free money, y'all. I've heard too many people tell me that they won't do the match because they need more in their paycheck. And then I follow up with the very next question. Well, how much are you taking out right now? And they cannot answer that. If your employer is offering you any match, at a minimum, you got to do it. Because if you're not doing the match, this is what I think about. So if you get paid every 2 weeks and you open your door to leave for the job and you saw $100 bill right there outside your door and you just kept stepping over it every 2 weeks, that's what I think about when you say, I don't want to take advantage of the company match. The company is willing to give it to you. Take it. Take it. Take it. Please take it. IRAs, so these are more your individuals. There's two types, traditional and Roth. So if your employer doesn't offer you a plan, then you can look at doing an IRA. Even if your employer does offer you a plan, maybe you want to do something a little bit extra on the side for yourself. IRAs are good vehicles. Annuities, they're both fixed and variable types of annuities. Again, another option that you might want to consider. They're not for everybody, but for the right person, an annuity could make sense. And so what I try to remind people is, I ask on at the top of this slide, are you on track? So even before, let's say we had a meeting, we were talking about your situation, just take inventory. Like, what do you have right now that's earmarked specifically for retirement? That's what you got to ask. What do you have right now that's specifically geared towards retirement? Just take a few moments over the weekend, maybe just take inventory on what you have. It's useful because when I ask you, hey, what do you, I ask that question, what do you have right now set up for retirement? I always ask that question in my meetings because I want to know. And if you are in a 401k, 403b, and you're not really sure kind of what you're doing, every plan has an investment counselor or representative that you can call, and it's free. How many people call? Very few. How many people go online? Very few. Not until they have to or need to, but I want to encourage you to really look at leveraging and maximizing resources that you already have access to. But retirement is coming. Plan accordingly. All right. I made it through. Look at that. 10 minutes strong. I appreciate y'all for that 10 minutes. I needed to get to retirement. Really quick before we hop into the Q&A, I'm going to have Simone come back in and launch the last poll of the night. And I'm going to take a look really quick back at the chat. Yeah, be right back. All right, we'll give it about another minute for these these last few poll questions. All right, so looks like most of you all got the poll. Yeah, looks like just about everybody already did it. I think we might have one minor issue, but yeah, the poll is still up. That's okay. We'll yeah, thank you, Simone. Go ahead and close it out. All right, so let me do something really quick. So thank you all for answering those poll questions. Give me a moment here. Let me make a quick note. All right, everybody learned something. Good. All right, all the investment accounts should have the same level. All right. I'm assuming one person just clicked it by accident, true, but yeah, that's false. All accounts do not need to have the same level of risk. I didn't even say this, y'all, but the third one was kind of, I just want to see, I didn't mention this, but the frequency of which you check your accounts will vary. I have seen the best results from quarterly. Yearly's fine. A year is just a little too long. I think that's the problem for yearly for me, is too much can happen in a year. Daily is just too much. I have enough stuff I'm worried about. I don't need my money stuff worrying me, but I know people check retirement accounts every day and they're not retiring for like 20 years. Monthly, maybe because you want to kind of get in that rhythm, because maybe you do other things monthly and you're trying to build the habit, but quarterly is really the sweet spot. Quarterly. So I apologize. I definitely didn't kind of mention that during the talk, but just kind of wanted to see where you all kind of thought it might make sense to build or get in the habit of. And again, daily and yearly, I think daily too excessive. I mean, too much. Yearly, not enough because too much time has passed. Monthly's okay. Quarterly's probably like the ideal because you can have a good month and get lucky. Nothing goes wrong. The sun is always shining. Like everything's perfect. And then month number 2, the exact opposite. So quarterly has usually been the best because enough time has passed to where, did I get lucky last month or did that message really set in? Am I building and forming new habits? So thank you all for indulging me on the poll question. All right, so we had quite a bit of activity. So if I did miss some of your questions and they were like super pertinent, I apologize ahead of time, but this was a real spicy session tonight because investments is it is a fun topic. And I just wish we could have more talks about investment in general. But I feel like I covered a lot of the very important pieces of like the things you need to be talking about as it relates to your investments. So give me a second. I'm just kind of giving a quick scroll. Let me see here. I'm just doing a quick scroll. Oh, thank you, Simone. Yep. So anybody needs my email address, Simone just threw it in the chat. So thank you, Rosa. Yeah, just hit me up, Rosa. Shoot me a note and we'll schedule some time to chat. Actually, probably while I'm doing this, I probably should bring back Charla. Let's go ahead and do the book raffle. That'll help me give me a few more minutes to scroll back through the chat. So Charlie, if you want to come on and do the book raffle. And is Daryl still here?
Sure.
Oh, man, Daryl's still here.
You know how exciting that is for me. So that's mean that since you're doing something else, you can't do my drum roll for me?
All right.
And the winners are Wanda Brandon, Daryl McMillan, and Martina Nguyen. Congratulations. Woo-hoo! Great. Hope you're all still here.
It was Daryl's luck. My God, Daryl got lucky. Third night was the charm for Daryl.
All right. Oh, yay. Okay. There's Martina.
Save my
investment. Good. There's Daryl. Okay, cool. Awesome. Well, congratulations. So Did you have more Q&A that you're gonna do?
We do. So
Jasper,
I'm
or
scrolling back through. Yeah, I got a few, Charlie. If you have
just
some
looking
announcements,
through
I
them?
can, yeah, I can wait or I can hit them now. I'm still scrolling, but I'm seeing a few I can hit really quick.
Yeah,
You
sure,
let me
go
know.
ahead.
All right,
No, go
so
ahead.
it was a question around 1099 on gains and how that affects like losses. So it's more of a tax related question, but yes, depending on income levels and losses you've taken with investments or even sometimes businesses, that can offset or reduce your tax liability. So some people carry like large losses. Some people carry over losses years on end. Like a lot of business people carry over losses because it just helps them. I mean, you're running a business. And I should probably say this too. Our tax code is favorable to entrepreneurs or business people, real estate investors, or just general investors. Like it's just more favorable. So if you only work one job and you're a W-2 employee, the tax codes and laws aren't that favorable because it's hard. You can't offset your income because it's coming just from one source and you don't incur any additional expenses. So you don't have like any, I'll say, expenses to kind of offset your income. So everybody shouldn't be an entrepreneur or a business owner. I'm just sharing with you like just the world we live in, where it can be challenging to really get some of those tax benefits of, you know, you taking losses in investments or in business and how that impacts your tax liability. So let's see. All right, so I hit that one pretty quick. Wait, I think I missed one about bonds. So bond risk. So the larger the organization and the longer it's been around, the less risk. So if I am a county or a municipality, like a city, I'm less riskier than a business that just started 2 years ago. So normally your municipal types of things, city bonds, state bonds, those are going to be a little bit more favorable on the risk side. There are some companies that just have a risky business model. And so if they issue bonds, just know, you know, there's a lot more risk you could take or not take, more risk you will be exposed to. One thing I want to say about risk, and I got into an argument one time with somebody on this. This is a real story. There is risk in your bank account. So you're checking the savings account at your credit union or your bank. There is risk in that. And the risk is inflation or purchasing power. So playing it safe is great, but over time you will lose purchasing power of your money, which is why investments is where you want to be and where you also want to, again, you want to have a good balance of where your money is located, because again, if I'm playing it too safe, I miss out on the opportunity for my money to grow. So you can't complain that you're not making any money in your bank account, because you never really will. Like, I don't know if ever again in my lifetime. Like, I know back in the day, one of my uncles in his 80s, he argued about his credit union was paying him like 13% at his credit union. And I was like, Uncle William, if the credit union is paying 13%, what do you think the stock market was doing? And then we got to a whole argument, but he's not a risk kind of guy. But back in the day, if you're all of a certain age, rates for playing it safe were a lot higher. But we don't live in that type of a world now. So I would say if you can't learn investments, try. Like, just try to get in someplace somehow and stick to it. Okay, I think I'm hitting. Okay, go back. Covered that. All right, so I think we are good. Let's see.
What is your email address again?
It is, I'll just reshare. Simone posted it, jsmith at readytobuildwealth.com.
At readytobuildwealth.com. Okay.
Yes,
Thank
ma'am.
you so much.
You're very well. Just check. I just posted it again in the chat, just so everybody can make a note. If you need to reach out, because tonight is my final night with you all. I appreciate each and every one of you for 3 nights in a row. Y'all stuck it out. I know y'all still got tomorrow night. I won't be able to make tomorrow night's session with the bankers. So just as a reminder, all those lending and y'all was getting on me yesterday with these real estate questions. Have those ready for the bankers tomorrow. Right. Charlotte, if you wanted to come back in, so I think I hit all, I think I hit all the questions.
Yeah.
Okay, groovy. Nobody has anything else, huh?
I do.
Oh,
Me,
go ahead.
me. I just wanted to
Okay,
thank you
Omar.
about the investment account concept, because I think that answered the question that I asked you in the first session, which was, what do you have for people who have less money than they have months? You know, when you run out of money, but because the inflation rate and the prices keep going up and down, some months you may have a surplus and some months you may not. And if you have a surplus at the end of the month, for God's sake, put it in an account somewhere that's not immediately accessible to you. And that was what I was trying to find out. And you gave us that answer when you talked about an investment account that will allow you to build up stuff. It's not the Christmas account. It's not the Easter account. It's not the Thanksgiving account where you're going to spend it all in that one event, you know, at the end of the year or whatever. But I think this makes more sense, and it will help you develop another stream of income. And that's basically the point of investing in the first place, is having a second or third or fourth stream of income, which is what my interest was. So thank you. You gave us that.
You're very welcome. You're very welcome. And let me say this to y'all. Just imagine if more of us knew, even like the real estate investment trust, like just imagine if somebody told you that at 18, where you were like, man, I'm working on my credit. I haven't figured out how to save, but they told you about the real estate investment trust and you start buying shares at 18. So by the time you were 30, you would own thousands of shares of a dividend paying stock that was in real estate. So technically you were a real estate investor from 18 to 30 and you were getting income. And you don't have to take the income by way of a check. You could just reinvest it. But if you fell on hard times, you were like, man, I really wish I could find some easy money. And then, you know, you're getting that quarterly check. You could plan around knowing that I'm going to get about this much money, even if the stock price goes up or down a little bit. Like, but nobody tells us this stuff. All they tell us is work hard, go to school, get a job. I mean, society has told us all these things, but the wealthiest people don't do most of it. They do the exact opposite. And some of the wealthiest people didn't go to school. They dropped out and learned to trade and then learned how to invest. I don't knock our education system. I just want more of us to learn about this money, because that's what's driving all of us to do what we do. I love what I do. It's just hard when you start out, and it's never like perfect. Like I have a lot of goals, but like, I just know that if everybody had a similar conversation like we've had tonight or the previous 2 nights, just imagine what, I won't say the world, just imagine what this Occur community could do. Like, let's just say Occur, again, Charles, I'm throwing stuff out in the universe. What if we just had a challenge at the beginning of the year where instead of these savings challenges, we did an investment challenge? Like, I think of that as substantial, where now you've got, in the savings challenges, I've seen churches do it, sororities, fraternities, and they're like, hey, y'all, can everybody save 50 bucks? And everybody gets excited, they whoop it up, and everybody saves money. Now, some people go buy stuff, some people pay off debt, but I'm like, we took that same type of approach and did an investment challenge. And everybody, before we started, had an investment account, whether it was with me, your cousin, your friend on the computer. I don't care who your account is, you just got to have an account so we can track and tell this story of what happens when people work together. I'm off my soapbox. Charlie. You better come back on here, Charlie.
No, well said. Well said. Yeah, you put out the positive, and I'm sure we'll receive it. It'll happen, because I'm right with you. I was just telling Sandra a little while ago, it's like, oh, I've got ideas. Lots of ideas. So now we're looking for the funding to make it happen. Yeah. But as usual, Jasper, it's sad to say goodnight, especially for the last 3 days. You've been fantastic. As usual, everybody learned something. I always learn something new, even in the 3 years that we've been doing this. Every time I learn 1 or 2 new things that I will apply. And it's very appreciated. Everybody has Jasper's contact if you need to talk with him more offline. please feel free to reach out to him via email. And thank you so much for attending. We will see all of you, I hope, tomorrow for our last session. Hopefully not for this year, but at least for this time period with Patelco Credit Union. And as I mentioned, they will probably be able to answer a lot of the questions that we had last night. And if they can't, then they'll definitely refer you to someone that can. So we're looking forward to seeing you all. Have a wonderful evening. Be safe and healthy.